Right, just jumping into it here. We've got what are we at? So 10 to 10. So in the sort of tail end of the Euro session at the moment. So I've decided to sort of hold off a little bit sort of through doing these daily reports on the Mondays through Asia session, just because I do the weekend wrap and then the start of Asia typically is just so quiet. Like you've got the people that are moving the market, they're all pretty much still asleep. So occasionally you get couple of movements in that through Asia on the Mondays and that, but typically not much. It's generally typically pretty light on for news and data as well. So uh, basically, just to have something different to say as opposed to the sort of the weekend wrap and that, I'll start doing these ones probably a little bit later, sort of through the Euro session, just on the Mondays. But that aside, jumping into it. So we're seeing DXY mainly through Asia and Euro. It's been this general sort of downward grind. I mean, this is on the 4 hour here, and I'll get to the 4 hour in 1 second. But as we saw, it was pretty flat on the open here. We did have a little bit of a gap down. So where we got the close, Saturday close here. Did look pretty flat here, but actually this is probably more realistic at the open, the 11 down here. So we had the gap down, push back up here, and then it's just been this slow grind. It's really trying to hold on to this lower zone here, but we can see at the moment it's finally sort of just giving it up. Quite a long sort of rejection off this main rising trend that I was sort of looking for. So I'll jump back onto the 4 hour so we can see that a bit more. You can see that sort of like it was trying to sort of form this little, there we go, Aussie breaking a little bit high. That's good. Trying to form a little bit of this sort of channel in this recovery zone here, which, flipping back again to the 1 hour, is very sort of close. It could be to a little bit of a bear flag. Obviously, if we break through this rising support, which is tested once and obviously rejected back up, and let me just get this one off 1 sec. Yeah, that's better. Yeah, so if we can sort of break through this little channel, and then obviously sort of take out the lows of this sort of little sort of fake out move down here that sort of got marked out, that'll be a nice little confirmation to show the sort of like coming down to retest these lows here. Obviously, it's still in a very much a sideways grind. It is slightly sort of coming obviously to the downside now. We can see obviously certainly this push up here has put in a little bit of a lower high. So as long as it can keep sort of tracking down this side, sort of be keeping an eye out for where we might be able to see sort of, it might, obviously these things don't go in one move. So we may sort of see a little bit of a sort of like a breakdown side here. We see this could almost be forming into a little bit of a channel. We've got two sort of, got the nice same angle on the top as on the bottom here. So a breakthrough here, could see it come down here. That'll give us a third touch up onto this bottom line here. Push up here, possibly some sort of retest, and then something into this sort of direction. So I don't think we're going to get a straight meltdown in that. There's not any sort of, the meltdowns and big hard moves generally, most of the time, come from some sort of news catalyst. When it's just normal sort of back and forth, you normally see the grind, and then this kind of thing here, news. Or last week we had the bond market, then Jay Powell talking. So like, these kind of bits and pieces, they're the stuff that sort of like will give you that fast, sharp change while people have knee-jerk reactions and alter their books and get out of their positions and all this kind of stuff. But normal trade, unless you're sort of breaking through a major level where you'd be pretty much guaranteed to have a lot of stops, like, as I said, once we get down under this zone here, I imagine a lot of people that are trying to sort of buy this last dip up, they'd have their stops there. And once you clip that, if that's in the middle of a session, then you can get a fast move down, because obviously a whole bunch of sort of stops are being hit, positions and that are being liquidated sort of quickly. But throughout the normal trade here, I'd imagine we'll probably see a little bit of a grind down south here. But an early indication of these sort of channel breaks, I mean, we haven't got the break here yet, but certainly if you were trying to trade this as a channel and you were looking to the long side going up, you want to see the continuation, whether it sort of comes up and touches the top two sides here, but comes back down, and you're starting to see the channel here. You would have wanted to see this push sort of come a little bit further up and hit up here, and then sort of start to come down. It could have come down, could have come down here, could have come across here, could have come here, could have gone back up like this. But you want to see the completion of the channel each time. The fact that we've got two touches. You can kind of call this a third, but not really. But you got two touches here. You got two touches here. It's starting to shore up of, okay, if this were to continue and this was going to be the channel, you would want to see this move here have continued up to the top side here. Obviously, it's failed to do that, and this is what's giving us our sort of like, you know, it's although it's still a higher high, these ones here from down over here, it's a shallower push up to the top side. And this is, again, this is the kind of thing that you start to see when you start to see these rolling over motions. So like a sort of, I don't know why these always come up the other way, but you start to see these sort of rollovers here. So as I said, like you probably won't get, and with this kind of thing, you're not going to get a straight meltdown, but you know, you start to see that it's not quite hitting the same angles and the higher levels that you'd want to see to go, okay, now it's hit the top here, sell down, sell down, sell down, and then sort of look for some support and bounce as it comes off the bottom side here. I mean, this could still react. I mean, if you zoom in here, you can see that obviously it's come in and pretty much to the cent, had that reaction and it sort of bounced back up. But that was sort of like people that are trying to trade that channel, and obviously sort of like if they can't hold that or can't hold that momentum, or there's not enough of the buyers to sort of really continue that bounce to push off there, and it takes it out, well, I think you start to see a little bit more of a shift to the downside. And as I've said, this just goes again that with what I've sort of said most of the time, if you follow the gap from open of DXY, it'll give you a bit of a sort of idea. Obviously, we got a little bit of a grind here, but nothing like, as I said, this is just another example, the small little gap here, and that charged through the whole session. Small little gap here, that charged through the whole session. These sort of things. I mean, this is obviously gap down, but even as it went up, it only just sort of ground up a little bit, and now it's starting to sort of come back down. So again, I'm sort of still looking for this little break of this sort of main channel, sort of coming to the downside here to sort of see a little bit more of the market. Say, okay, let's cool it off. Let's have a think about it. I mean, you can still look for your sort of horizontal supports through these sort of zones over here. So again, this would line up as you see now. You'd have the horizontal supports coming through here. You'd have this, if this were to be a little bit of a sort of downtrending channel, these start to give you little confluences to sort of say that, hold on, wait, you know, there's a reasonable chance that if we do get the breakthrough here, this is where we're going to see another bit of a push up. And whether you're trading channels or levels or a mix of both, because I mean, that's the thing, there's so many different people in the market trading so many different ways. You may have one way of interpreting the chart, but you know, there's so many different people adding. That's why, you know, you want to look for the confluences, because you want to look for the reason that if I was trading a horizontal, well, this is where I'd try to be getting long, because I know this is a support area. If I'm trying to trade the sort of like, you know, this little sort of downward channel to just get this little bounce and possibly get a swing back up, this is where I'll try to go, because I can see on this little downward channel here, this is a reasonable area. And once you start to get a couple of confluences, obviously a higher time frame better, you can say, okay, that's 2 or 3 portions of the market that are all sort of picking that same point. Well, that's why it's going to be a little bit stronger. But at the moment, we're still inside, as of right now, inside that channel. So if we do get the breakdown, I'm looking to sort of see this little bit of a channel sort of breakdown. Main tests are obviously going to be down the bottom over here, but we've got a lot of, well, we've got a fair bit of news coming out, but we've got big bits of news coming out. And really, after the markets, every central bank at the moment just sort of seems to be going, oh, look, we're waiting on the news to determine what's going to be happening. And obviously, as they always do. But CPI is out for US this week. And with CPI out, that's going to be the one that really sort of smacks it down if it does come in a little bit lighter. If it comes in hotter, well, then obviously that sort of supports more of the idea that, oh, no, maybe we haven't got on top of inflation, and maybe we need to continue going with the rates a little bit more, higher for longer, this kind of thing. But of course, if it does come in lower, which it has been sort of trending down, then they're not going to necessarily want to push it so hard and risk sort of breaking the economy and putting them into recession when it's already moving in the right direction, well, seemingly in the correct direction that they want towards the target, that 2% sort of target. So yeah, I think that'll be quite crucial. If we get that, that could be and this is what I was saying before, you can get these drifts sort of through the sessions. You're going to get these kind of moves. These are your sort of, like, this wasn't from CPI, but these are the kind of things. This was NFP. actually, wasn't it? So, that shows that when you get those big ones, you get people go, okay, bang, we're done, and we're out. So we've got the technicals lining up for it, particularly if we can get the breakdown here, and if we can get down underneath this 105.40 area. Certainly that's setting up on a technical basis. If the fundamentals support it as well, then I would say that's what's going to give us the major breaks, and we're going to start to see a bit of a shift with the DXY and obviously most of the USD crosses. So I think it's going to be quite a sort of crucial week for this week. There's other bits of data coming out as well, but I think the CPI is the main one that the market's going to be looking at. Okay, and we flip across on Aussie. So Aussie, we over the weekend on that weekend wrap and that, I was identifying this sort of negative divergence that we had sort of setting up, which obviously sort of like is what you want to look for when you're looking for these sort of base plays. And really the fact that it just ground sideways here for so long and just could not get back up. It's got a little bit. I don't know why I've got this line through. It's sort of cut through here. I'm not a big one of when things sort of cut through. But yeah, I'm not necessarily a big fan. I'm not sure why I've got this one. I mean, it does kind of line up pretty well with it if you exclude this one that's come to the downside, but not enough for me there. So anyway, back to what I was saying. It was only on the 1 hour, but look, we sort of saw that very much a rounded bottom here, and it just tried to push down a number of times, particularly this effort down here. You got to think, because obviously that's a big bearish candle. This was a second big bearish candle coming down, and then bang, sort of springboarded back up and really sort of tightened up in this range along here. So it's just underneath the 61 of that major breakout that it had from the falling resistance 2 weeks ago now. But the sort of here and now of it all was, as I said, over the weekend, this negative divergence we were seeing, which are a great base play. And we've seen that sort of play out a little bit slow through Asia, but it's slowly grinding up at the moment. And this obviously, like DXY, again, I always say it's not Aussie isn't part of it, but it's a good barometer for broad USD buying generally throughout the week. Obviously, it can be skewed at times and relate differently sort of other times, but it's a pretty good sense. But we've seen this sort of falling resistance that obviously Aussie had been respecting a few times coming through here. It is popping through to the top side here at the moment. So look, it's not out of the woods yet, but certainly at the moment it's looking a little bit better than it was. If you're not going down, I guess there's only one other direction you can go up, unless you're doing these sort of grind sideways kind of thing. So if we can see a little bit of a continuation with the Aussie back up through this zone, I mean, certainly on a 4 hour, there's a nice push up here. It puts us outside the top side of this sort of falling resistance. You can see every time here, it shows it better on the 4 hour that, price hasn't even attempted to break through at any of these points. These have just been wicks and then straight rejection. This one here, obviously, it's only just come into, no, we're 1 hour into this new 4 hour candle. So it closed right on it, had that wick on the top, but now it's opened up on the outside, and it's thinking about it at the moment. RSI supports a chance for a little bit of a further move up. And obviously sort of like, if you can get back up above these sort of previous support areas, so 64 on the money, we know 64 is a pretty strong area for it, particularly the 90s as well. But if we can get back up on top of that, then you might see a little bit of a continuation. But as I said, CPI is going to be the big one for US dollar this week, and obviously for the crosses, so in turn with the Aussie. I think we've also got the employment data out for the Aussie as well. So you want to see a couple of things line up to sort of support it coming back here, because obviously it had a pretty rough time last week, and it really needs to sort of prove itself a little bit. I've got this little mark up here. This is obviously just trying to sort of pick early stages because we had this rounding bottom here. Yep, just taking a call. Yeah, so this is this is just an early call kind of thing. Potentially, if we could sort of see a little bit of an inverted head and shoulders through here. Look, it's not near confirmed. I mean, this is a bit of an ugly looking shoulder if it were to be, but we do have it looking like it could be a little bit of a neck coming down here, particularly if we can push back up into this sort of, sort of early 64s sort of stage. One thing I did sort of notice with this particularly, and I did note this on the weekend as well, depending where you want to take your sort of your head from here, and particularly because this is such a scrappy looking sort of thing, I guess you could kind of call it a bit more. There's maybe the neck, and there's your head for you there. If that was your measured move, if this does turn out to be a bit of a head and shoulders, inverted head and shoulders, your measured move off the top of that also brings you right back up into that major breakout zone at 65.20. So just something to keep in mind, and that obviously sort of there's a lot of work that needs to be done with these things. But Aussie does tend to like inverted head and shoulders for their little turnarounds, particularly sort of as after it's been bashed for a while. So it won't sort of fly back up in a V shape. It's not a big V shape recovery kind of currency pair. So certainly needs to grind up a little bit. So maybe some sort of data or a little bit of a grind back up here, a little bit of a knockdown, and then if it does come up here. But certainly if we can get back up to this zone, pull back, find a little bit of support and have another go, then you can start to sort of like draw up these sort of, you'll start to see a little bit of this kind of thing here. And it'll be, you can say, okay, look, where would our channel be? Obviously, this is all just hypothetical at this stage, but then you could start to go, okay, where's our channel if it hit resistance over here, support over here, and then you could start to work yourself out and play your way back up here to a measured move, back up to that major breakout level. But again, these sort of things, at the moment, it hasn't even proven the neck to be, sorry, the head to be sort of in play. So we've just got to see this push up here, then we can sort of play it out a little bit more, but it's just early days with this one. Okay, and across to gold. Gold, pretty much as said over the weekend, it's going to have this little grind along. This, as I said, is probably a little bit of over exaggerated with the size and everything, but more or less what I'm looking for. I'm looking for this kind of stuff here. Make it a bit more realistic, somewhere along like this. Basically, just a little bit of a basing of it all before we sort of get a bit of a push back up. We've got a little bit of a channel that it seems to be respecting here at the moment. Certainly, sort of as it's sort of come down here, we've got a little bit of a negative divergence coming as well, as you can see with these parts here. So it's pushed down to those bottom lows. Obviously, the selling as of now hasn't sort of come back to those levels, so the buyers are sort of, at least the pressure is sort of stepping up a little bit, and it's really just, as you can see, grinding sideways. So, first point's obviously to get out of this little sort of downward channel. This may sort of, again, may come up here, may come here, but this is the general idea of what I'm looking for. Once it can sort of shore up a little bit of a box, then look for that pop and that break, and then we'll start to look for the higher lows moving up to the top side there. But at the moment, it's not necessarily anything to sort of jump the gun on. As I said, you've got the US CPI coming out this week, so I think that'll be another thing that if we see sort of the broader sense of the market go, okay, yep, they're done with the rates, then all that capital is going to be looking for somewhere else to park itself, and obviously in all the other crosses as they sell off the US dollar. But I think sort of gold could definitely benefit off that scenario as well. But I imagine sort of coming into these things, generally the sessions before, like leading into these larger news data prints, they tend to be quite quiet. So I imagine a lot more of a sort of bit of a grind, a couple of bucks here and there before we actually see any major moves. If we can get above sort of 47.50, might sort of perk up a little bit. But certainly at the moment, I'm expecting a bit more sideways to build a base and then sort of try to go for a bit more of a sort of swing. Where we at? A bit more of sort of, as I said, down here. A bit more of this. No, it's a bit ugly, but a bit more of a base down here and then look for that pop and then try and ride that back up to these major levels over here. I think a lot of this is going to be predicated on the US dollar selling off. I think the Middle East situation as a driver for gold is done and dusted. I don't think, unless anything really major sort of kicks off, I think the market itself has sort of moved on from it. Like it's obviously still happening and it's still bad for everyone involved, but in terms of how it's going to affect and drive the market, I think it might be the market's kind of moved on from this for a little bit now. So still looking for upside for gold, but I think it's worth sort of just holding off for a little bit, just while it can potentially build a base. This could still obviously slip down to these lower levels, and around these areas here, we can see that obviously it's been supported previously, these sort of 1912, 1914 kind of areas. If we see a push up on DXY, it could obviously then affect gold and sort of be the driver to push it down a little bit further. But at the moment, it looks to be just, obviously, you can see it. It's just sort of sitting in this tight little range. 41 highs. I didn't actually see it get down to 28. I reckon this might have been just on the open. So while positioning, these kind of things sort of stop out a couple of people perhaps. But most of the session I've seen today is this $5-6 range, which is, as I normally sort of say, through Asia, about $5 is what I give for a range on gold. Okay, flip across. Copper seems to sort of be holding itself in. Again, off the weekend, we sort of saw that these levels hadn't quite sort of come down with the selling, but what was it on? Was it on the daily or no? Yeah, it was on the 1 hour that we can see this marked out here. That obviously the selling wasn't quite coming down to the same level as it had previously, which was again lining us up for one of these sort of negative divergences. And that's why I say this time and time again, because there's such a great indication of sort of like basically prices being pushed down on a lower sort of segment of the market, moving it in that direction. And this is why you start to see these little pops come up the other side, because it's not a big market consensus pushing it down. Otherwise, you'd see it heavily oversold. But you're seeing it sort of obviously come down here, but not quite to the same levels. We got like slightly higher sort of like RSI on the Stotch, while price was moving down. That's the negative divergence. And you can see obviously today we sort of popped up to the top side here. So again, it's still really sort of choppy. This 4 hour channel that I was trying to sort of trade through obviously gave way. So this is still in danger of being a back test, which then could, just sort of flip and sort of come back down to the downside here. Could sort of just reject and go, oh, not this one. Just reject and sort of boom, back down here. But if we can sort of hold up through this zone here and push up here, this is again what I'm expecting to be quite a heavy sort of task for it to sort of get through, because this is the falling resistance continued on from that large triangle from the majority of the year. The bottom side of it seems to have just kind of gone by the wayside. Like, you broke this massive triangle that had been respecting for, better part of 12 months. You didn't get the massive sort of meltdown that everybody was expecting. And it's really just sort of like, what I mean, sort of just hung around this zone down the bottom here. So I think, again, if you can get on top of this side here, because it seems to still be respecting it, if you get on the top side of this here, I think the market might sort of be going, okay, there might be something in this. And again, this is when, US dollar sells off. These things are going to be sort of looking where else can the market sort of look to park a bit of its cash. And, risk at the moment has been pumping through at least the equity markets the last week or so. Aussie dollar's yet to sort of benefit much of that. But, and obviously still same with copper, because copper's also a bit of a risk asset with it all. So you want to sort of see that, if people are sort of saying that, okay, the rate cycle tightening and all this is sort of pausing, and they're on the tail end of that, well, you probably might sort of see a bit of an appreciation, obviously, in copper as well. And finally, just on China, the YUAN, still grinding. It sort of was trying to sort of shore up a little bit of a channel coming up through here. This was the zone that we wanted to sort of see it get up and hold on the top side of. You can see it better on the higher time frames. But this is the midway of the major range that it's in. It's obviously finding a bit of a head, bit of sort of resistance above head here. At the same time, this could just be a back test of these previous highs of that little sort of lower channel. But really, again, it's just such a tight range. I mean, this whole thing from the major range highs to lows here, which has been going for the 3 months, this is only 1%. So, it's just realistically, it's this supporting, resisting, supporting, till you get the breaks of these. I think sort of, it's just going to be that continual grind. Getting a little bit of a sort of triangle tip here, because this large one down here is actually the sort of rising support from earlier in the year, which obviously we could see had a very strong reaction once it finally came in contact with. But certainly, topside, I think you may sort of find a couple of barriers here because you've got the horizontals on these 4 hours, which are probably also dailies. You've got the major one up the top here. You've got this falling resistance here. I think it's going to have to need something fundamentally to really line up with it to pop it out to the top side here. Downside, as I'm still looking for, is basically in line with the US dollar selling off broadly. So that's a fundamental thing that I could see that would be pushing it to the downside here. Again, if the CPI for the US sort of comes in a little bit hotter, well, people are going to be buying it up, and the yuan's not going to be an exception necessarily to that. The only thing that may sort of make people or the market a little bit cautious is that they know that the PBOC are sitting up in this red zone here and happy to sort of sell it. Well, they previously were, and they whacked this down here. I mean, this sort of dropped off, a fair whack, like that's 0.5% move in the space of a couple of hours. So, people would be a little bit risky, and they'd probably want to see it sort of confirm that it's moving out the top side here before they start to jump on. But again, it's just that grind. So I'm still looking for the downside, but again, I'm not looking for a great deal of movement sort of prior to sort of CPI print coming out. I think that's going to be the big confirmation and the big thing that drives the full market. All right, that's about it from me.